Welcome back to What's Hot, What's Not, C.R.E. It's Monday, March 23rd, 2026. Let's kick off the week with the latest residential and multifamily data. So, what's hot? First, supply is finally cooling off. Multifamily completions are projected at just 333,000 units in 2026. That's a 36% drop from the peak and the lowest annual total since 2014. The construction pipeline has contracted over 50% from its high. This is the supply relief the market has been waiting for. Second, permits are rebounding. January 2026 saw a 29% spike in multifamily starts, with permits running at 453,000 annualized. It seems developers are getting cautiously optimistic about 2027 and 2028 deliveries. Third, build-to-rent remains a bright spot. Over 64,000 BTR homes are under construction, with 139,000 more in planning. Home ownership affordability barriers continue pushing demand into rental housing, and BTR communities are winning on space, privacy, and flexibility. And fourth on our hot list, investor sentiment is improving. Cap rates have stabilized and are poised for slight compression. Both private and institutional buyers are becoming more active, acquiring properties below original asking prices as those bid-ask spreads finally narrow. Now for what's not. The vacancy picture remains elevated. National multifamily vacancy has risen to 8.6%. That's the highest since the post-financial crisis recovery, and well above the 6.9% historical average. We've seen nearly 1.8 million units delivered over the past 3 years, which has outstripped absorption. Related to that, national occupancy sits at 94.5%, down slightly from January of 2025. High-supply Sunbelt markets like Houston are seeing absorption rates fall, while concession activity remains widespread. And finally, rent growth remains sluggish. Average rents increased just 0.2% nationally in January. C.R.E. expects year-over-year rent growth to lag through the first half of 2026, even as vacancy stabilizes. Operators are very focused on renewals over new lease velocity right now. So why does all this matter? The multifamily market is entering a critical rebalancing phase. The supply wave that pressured occupancy and rents is finally cresting. Completions will continue dropping through 2027 and 2028, which should reduce vacancy pressure and support rent recovery. But we're not there just yet. As for the investor takeaway, the setup is improving, but patience is required. Target markets where supply is contracting fastest and occupancy remains above 95%. BTR continues to outperform, with stronger rent collections and lower turnover. Avoid high-vacancy Sunbelt metros until absorption catches up with delivered inventory. And watch for cap rate compression opportunities as transaction volume rebuilds through the back half of 2026. Thanks for tuning in. See you tomorrow. Don't forget to like, share, and subscribe. Visit hotnotcre.com to learn more and subscribe to our newsletter.